What did you make of what the Fed chair said?
I think he said the right things and made clear that the Fed is going to have to be concerned about inflation, need to watch this situation unfold, and that they may act, but they're going to need to see a lot more information before they jump in. And I think that was the right message for him to give.
I mean, he talked about inflation potentially being more persistent, right? They've been going with the idea that this could be temporary and transitory. This sounded like something a little more longer lasting, perhaps. I also thought it was interesting. I'd love your take as well on this idea of developing tension within the mandate.
Yeah. So he had to say that there's a risk that inflation might be more persistent. Here's why. When you get a tariff increase, most companies I talk to, they're waiting to see how this unfolds, but they're going to negotiate with their suppliers. They're going to do some price increases, and some will come out of margin, and many will take 2 or 3 years to recover the margin. That means more than one price increase. Price increases over 2 or 3 years, and that's why he said this has potential to be more sticky than a one-time price increase, and I agree with him. And on the tension in the mandate, you and I have talked before. If unemployment stays well-behaved and inflation is sticky, they won't be able to act. If unemployment spikes, then they'll have to look at acting and think maybe the demand destruction may offset some of the cost shocks. But they're going to have to see that first and analyze it before they act. And that's certainly not by May. And that's one meeting at a time. And I think he's trying to convey that so they keep their options open.
How concerned do you think he is right now about stagflation, which you told me the last time that we were together is basically here? You described what you thought were the conditions to describe it now.
Yeah, I'm sure they're concerned about slowing growth and about sticky prices. Having said that, a lot of this scenario is going to depend on what is done over the next several weeks. Are we going to negotiate with trade partners down to 0, down to 10%, down to 20%, or higher? If we negotiate reciprocal agreements down to 0, then that's one thing. But the concern is this administration would like more revenue than that from tariffs, and they may negotiate down to 10% or something higher, and that's going to create a sticky cost issue, which will translate it potentially into sticky prices.